Let's move on. Dr. Stephen Nash is from FIIG Securities, joining us from the Cameron City this morning. Good morning, Dr. Nash. Let's just start, if we can, with your take on that debt issue by BHP into the European markets overnight, which, of course, just a few days ago, Mike Smith was saying was shut. What is this telling you in terms of what they've had to pay over the odds at this point?
Look, to some extent, Smith's comments are correct in the sense that it's difficult for banks to find funding, Australian banks, at the moment. Not impossible, but a little bit difficult. Pricing a little bit higher than normal. Again, I suppose the issue highlights the fact that there is some potential for major corporations to issue. Obviously, BHP is a very attractive credit for major European corporations. I think the problem for Australian banks is that for European investors, they already have quite a large exposure to them. Australian banks will look very good if the series of downgrades of other banks, particularly US investment banks, continues, and as Moody's has foreshadowed already. So in a few months' time, Australian banks will look even better than a lot of their global counterparts. But the problem is, as I said, I think a lot of European investors already have quite a large weighting in those banks.
What does it mean then that a miner can go and tap these markets? Okay, the banks look problematic, but is there something quite distinctive and therefore there's a positive takeout from this issue?
Look, I think there is a positive takeout in that the major corporations still can access the European market. BHP, obviously very well known, a dominant global resource player. So I think that's encouraging, and I imagine that there will be continued bank issues, but again, pricing will be a little bit tricky right now in the midst of this European crisis we've got.
Is there any problem, Dr. Nash, when a lead manager caught up in all of this is Santander, amongst others, and this is a stock where we're wondering about the capitalisation of European and particularly Spanish banks. Yeah. Does that pose problems?
Look, I think a lot of these banks are headed lower in terms of credit rating. The BBB category beckons for a lot of these banks. It's not a good story at the moment, but I think hopefully investors are adjusting their mandates to cope with this, and that we won't see a lot of selling of bonds as they transition into lower credit ratings. Santander, obviously, very solid bank, very large bank, well diversified. So yes, they're Spanish, but they have a lot of diversification. So I don't think there's any major concern there now.
Talk about major concerns out of Japan now. Yeah. Barely registering in terms of a headline, the Fitch downgrade. So was that just something that was, a little bit late to the party?
Well, as I said, I think with a lot of the banking industry, we're transitioning to a lower category of ratings. And that's also happening with sovereigns. We've seen a lot of the Europeans move down. Now Japan again from the AA category into the A category. Again, this just highlights the credit quality in the Australian market, Australian government bonds, and the rating just looking even better every day. So that's one of the reasons why we're getting a lot of compression between the Australian 10-year yield and the US Treasury 10-year yield.
Dr. Nash,